Hey everybody, welcome back to the first podcast of the year in 2025 with ourselves. Getting pretty close to the name.
We're close.
We're close as we've ever been. But I'm Mac, and this is our owner, Chris Sabonik. And so starting off the new year, a couple things we wanted to hit on for this first podcast. One of them is a familiar topic that we've talked about a little bit in the past, but again, wanted to highlight some things, and that's appraisal waivers and how those can be beneficial with getting offers accepted, and it's something that we expect to see more of in 2025.
Yeah, appraisal waivers are awesome for anybody who's ever purchased a home or gotten to or buy or sell a home, even using them. It makes your mortgage that much closer to I would call it a cash offer, because it essentially is exactly what it sounds like. It's a waiver of the appraisal, so we don't need it. I guess one important thing before we dig too deep into appraisal waivers, and I don't know if you're going to touch on this later or not too, probably, but before you submit offers on any home, your lender should be seeing if you get an appraisal waiver. You shouldn't be figuring that out during the loan process.
Right. It shouldn't be a surprise.
Shouldn't be a surprise. You should know, because you want to be submitting your offer knowing that you have an appraisal waiver. Because think of how much stronger your offer is if you go tell the seller of the house, hey, we'll take it for this price. By the way, you have 10 other offers. They all need appraisals. We don't need an appraisal. So it automatically makes it that much better. But yeah, running AUS, automated underwriting system, which is how we know if you're approved or not, that's what'll spit back that approval for the appraisal waiver or not. And people can get those with as little as 10% down as far as a full waiver goes.
Yeah,
so if you're putting 10% down, there's a chance that you don't need any type of appraisal at all.
Yeah, that's one thing we wanted to highlight, is that it's only going to require 10% down on the purchase to have the possibility of getting an appraisal waiver. And there are other things that go into a factor of it, the client's credit, LTV, obviously, like we just mentioned, does. But a lot of it has to do with the property history of that specific home. So I did have it happen recently where client got an appraisal waiver. The agent actually thought it was good for any property that they went and looked at. It's not. So it's not tied to your buyer. It's really tied towards that property. And that's something too. If you are a listing agent, we can run kind of dummy scenarios and see if you can get a appraisal waiver on that property you have listed. So it's big for listing agents as well.
Yeah, no, big time. I've had some listing agents before say, hey, again, it is client by client, property by property, so it's a little bit unique. But I have had agents say before, hey, any chance you can check it out and see if there's a type of a waiver available on this. And like Max said, we'll take kind of like a dummy client profile or kind of a user.
Somebody else who had pre-approved in a very similar status. Hey, we'll put their name and we'll plug it in. Do they get it?
Yeah, they get it? And if they get it, great. If they do, it's not guaranteed, right? It's not perfect science, but yeah, pretty close. And that's, I know, super helpful for some listing agents, because I've had listing agents reach back out and say, hey, thanks to you, we were able to, we accepted an offer that had an appraisal waiver.
Yeah.
And a lot of times it might not even be our offer, but at least they knew that they were available and they were out there and they could be looking for it.
And getting on the topic, so appraisal waivers come when we run AUS through Fannie and Freddie. And right now there is kind of a middle ground, which is the ACE plus PDR, which we see, which is an appraisal waiver plus a property data report. Or if it's DU, we're getting the value acceptance plus the property data fact sheet. Very similar things. And this is something that sometimes we stay clear of in the past, but it's becoming more and more common now. And again, they announced that we expect this to be more common in 2025. So what it basically means is the property value is accepted, but they just need more data on the property. So they're going to go, make sure the bedroom count's correct, bathroom count's correct, take a few pictures. It sounds like an appraisal, and honestly, you might think it's the exact same thing, but the value's already been accepted. So the number one reason these deals fall apart, why appraisal waivers are so great, is because the appraisal is probably the number one factor that makes deals fall apart while it's in process.
Definitely a big one.
It's a big one. It's a big thing. There's a reason why agents and all of us is the appraisal back and what did it come back at? This takes that out of that's out of it. Okay. So the ACE plus PDRs, that's saying we're accepting the value, but we just needed a little bit more information on the property itself. This you can get maximum LTV. You can get it 97%. They can be putting down 3%, and we can get that accepted value. So it's kind of like the cousin or the stepchild of the appraisal waiver itself.
It's right in between that appraisal and that appraisal waiver. The appraisal is the full thing. Someone's coming out, they're doing the whole appraisal. The waiver is no one's coming out. And that PDR or property data fact sheet, there's a couple different names to it. Whichever one we need to order is, it is like Max said, it's the middle ground.
But it's giving you the best part of the appraisal waiver itself, which is the accepted value.
Yeah.
Now, can those be adjusted appraisal? Just like you could lose an appraisal waiver, these could be adjusted based on some other factors. Maybe the client's income was higher. Maybe they decided to put down less. Maybe there's something they were paying off that now they're not. Like those things obviously can always change during process, which can affect appraisal waivers. Same thing here; those can be affected as well.
And it's pretty cool too because it's not. I guess there's something important to notice. Like it's cheaper than a real appraisal because it doesn't take someone as long. It's not a full report, so it's savings for your client. But I think it's also important to note it's not like guaranteed per se. They like the value, they agree with the value, but they need this report to certify the value and confirm the value. So the stats on it, I think over the last 2 quarters of last year.
UWM came out with it. It said basically out of they've probably done 1,000 or 1,200 of these, and they had 4 of them come back that had a value to be changed. So we're looking at 99% base. Pretty close, 98%.
Less than 1% of these things are falling through. So, but here's the cool thing. Let's pretend it does. Let's pretend you do get a property data report and you get it, and the person goes out to check out the property and it is gutted to the studs, and there's no kitchen, and there's no bathroom, and it is not what we thought it was going to be. All that they're going to do, that's maybe an extreme scenario, no kitchen, no bathroom, we're probably going to have some more problems. But if it's a scenario where it's not what we thought it was, or not what's going on inside isn't what was perceived to be going on, and the value's not there, it doesn't ruin or kill anything. It's no different than if an appraisal comes back a little bit low. All they do at this point, though, is they say, hey, this data report's no good. They basically crumple it up and throw it in the trash because they're saying it doesn't support it. And at that point, they'll send out a real appraiser.
Yeah.
And it's not like the borrower at this point is paying for the data report and an appraisal. The cost that they paid towards that data report just gets credited towards the cost of their appraisal.
Yeah.
So it's really not a bad thing at all.
And this is something we're talking about that's just extremely rare. We're talking 1% of the time this may happen. And
less than 1% of the time this might happen.
We talk about the savings to the client, it's pretty substantial. Like your normal appraisal is going to be $500, $550. All right. These property data reports, normally I've seen them for $180, $200 tops kind of.
Yeah.
So we're talking about maybe $300 plus savings for the client. And again, going back, no, I've said it, but like the value is accepted 99% of the time. So we don't have to worry about this thing coming back and blowing the deal up if the appraisal comes in low.
This is certainly something that can strengthen an offer, and I don't want to jump too far ahead because I know we're going to talk about our loan of the month like we usually do, but I have already, we're a couple days into the year here, right? Like we're early in the year, and I've already used this ACE Plus PDR. I already had a client utilize it. I guess I don't know. I wasn't there for the acceptance of the offer, but I have a feeling their offer was a little stronger because of it. Their offer was more likely to get accepted because of it, because we explained to the agents that we had this and what was going on, and it was so fast. Like we ordered it, and a day or two later, we had the PDR report back, and it's done. And
again, now these ACE PDRs, before it used to be kind of like an appraisal waiver where you're putting down 10, 20%. Now, up to your bare minimum you're putting down, these are eligible and these are able to get out there. And Fannie and Freddie have said basically these are going to be utilized more. So we should expect to see these more in 2025. So as from our side, we're going to educate ourselves. We're going to try to educate our real estate partners, real estate agents. Educate yourself. If you have questions on them, call, ask us. We'll walk you through them. If one of those does pop up with your listings, if it pops up obviously with one of our mutual clients, we're going to let you know about that as well. So that's something to look forward to in 2025. Should make the whole buying process a little bit easier if we can skip around that value portion of the appraisal. So moving on to kind of our next topic here, and that's our realtor training classes that we've offered to our clients, to our real estate partners, I shouldn't say clients, to our real estate partners that we partner with or people we are looking to partner with. And that's getting you out to United Wholesale Mortgage, to UWM out in Pontiac, It used to be every other week. Now in 2025, they shifted to every single week. They're going to have these classes, and these classes are super beneficial. We've gotten nothing but good feedback from people who have attended.
Yeah, it's awesome. It's really cool. You get to meet people from all over the country too. It's not like it's just agents from Metro Detroit or anything like that. It's people come from everywhere.
I would say the Metro Detroit agents are kind of the rare ones. Actually.
Yeah, it's much more common to meet people from out of state there than I would say in state or even local, and it's great. You're meeting people from all over. They're sharing best practices with what works in California and Florida and Texas, and you can kind of pick and pull and take things from there. It's great. It's a great.
It's a good environment to be in. It's a good environment to learn in because, like you said, these people are from all over. Everyone kind of takes their guard down and shares. This is what's working for me. This is what I'm doing on social media. Like these are tricks that I've used for my clients or my listings, and it's great to also have that network and to bounce things off of like that. I mean, the most successful agents that I see, around here that I work with, almost all of them have mentors that are in. Or not mentors, but colleagues, people that are in Virginia, people that are in Missouri, that are successful as well, and that's where they bounce a lot of these ideas off of. And it's a great opportunity to meet some of those people.
Like you said, it's a good place for people to share, and people get pretty open because you're not in a room with your competitors necessarily.
Yeah.
Like you're in a room with people from all over the country. They're more than happy to share what works with them because they've probably already picked up a couple things that that work from you. And I'll say this. We go to this training, several times a year. We go out and we make it a point to get out there and, we get better, our agent partners get better, everyone gets better from it. But I'll say this, having been in that training, I don't even know how many times I went last year, like close to once a month maybe.
Yeah.
Every single time I go, I still come back, usually with at least a page full of notes. And it's not, I'm not taking the same notes over and over again. I'm picking up something new. I'm gathering something new. Somebody says something that I'm like, oh my gosh, maybe we should try that or something like. I guess my point is if I've been there several times a year, several years in a row, and I can come back every single time with something, I'd be very hard pressed to think that somebody could go out there and it not be a very rewarding learning experience for them.
Yeah. And other things you're going to do there, you're going to obviously get to see the UWM campus, which a lot of people have been like, I've been to UWM. A lot of times you've just been to, I would say, the Sportsplex, which is about 1/3 of it. This is going to show you the whole campus in itself in that trip. So you'll see the underwriting pods. You'll see the sea of underwriters that they have, and the sea of people and workers and staff that they have there, and just that environment. And like we always tell people, it kind of it's like Google. The campus is absolutely huge, but it also gets to show you like who has our back and how things are so sufficient here. Why that is basically.
Yeah, no, exactly. It's a nice little look in kind of like into our back office, right? And we use a lot of lenders, UWM being one of them. But it's a great opportunity for you to kind of look in the back. Like I said,
this is how this works.
Look in the window, see how this works, see how the sauce is made. And I think when people go out there and they see that, if you come and visit our office here in Wyandotte, our little office, you're kind of like, oh man, how are these people so fast? But I think when you go visit out there and you see, the team that we have and some of the people that we have backing us from a lender side, it makes a lot more sense. Like you said, it's Google headquarters. So.
Yeah, and the other thing you'll do is you'll attend their sales meeting, which they had each Wednesday, which is normally super motivational each and every week for us to get out, get better. That's where I always take the majority of my notes of the day comes from that. And that's something that you can take advantage of there with UWM executives. These are kind of titans of our industry, the mortgage industry, but obviously that's tied in really close to the real estate side as well.
Yeah, no, a lot of good info for both. We've been doing it for years. I've never had somebody come to me and say, wow, that was a waste of time. Don't ever talk to me about it again. It's always been a good experience.
Yeah, and those they fill up fast. They do take like a month or so to get those things scheduled. So if you're interested, again, reach out, let us know.
No better time than now. January, February, March. I know it's Michigan. I know it's cold, but what a good opportunity to go do something while everyone else is sitting around. Yeah, go get a little bit better while everyone else is sitting around.
Yeah, it's a good way. It's a good way definitely to go out there and get better. All right, so moving on. Next topic we have here is we've been doing is our loan of the month. Loan of the month, pretty unique, coming from actually Chris here, and how basically Speed was able to make two deals happen.
Kind of two loans of the month, I guess.
Yeah.
Right? But Really just a good story, and like Max said, just a way for us to kind of reiterate how important I feel like speed is throughout this whole process. So I'll try to tell this as quickly as I can, but I think there's some important parts that we need to make sure we talk about. So had a couple clients approach me. Actually, it was over a year ago. We talked about them moving. They were getting ready to trying to set themselves up for retirement, and taken a while, but they finally found a place, and of course they're finally ready to retire too, same time. So everything's kind of coming together for them. This is good. It should be exciting for them. They're going to retire, move into their forever home, and be done with it. So they wanted to get into a condo, kind of downsize a little bit, not have to worry about the yard and everything that comes with the house and the maintenance and stuff. So they got a condo, and they've been shopping for condos, and they're way more than approved if they sell their house. It's no problem if they sell their house because that's where a lot of their assets are tied up. However, given the market and given the situation, of course, the condo that they found really wasn't going to accept a non-contingent offer. So they had to, or I'm sorry, wasn't really going to accept a contingent offer on sale. So the people selling the condo said, hey, we'd love to have you buy it. We love your offer, but we don't want to wait for you to sell your house. So we ran some numbers, we did some things, we found some ways. They have to utilize some of their finances. We had to chat with their investment advisor, financial advisor, and go through some things. But we found a way to make it happen. We could get them all the money. It was a little stressful for them. They didn't want to do it. They didn't want to liquidate some of their assets, but we could do it. They could get in their house, and we set up a plan to replenish everything as soon as they sold their house.
Yeah,
right?
It's tough to look at where it's like, well, 6 months down the road, everything's going to be
right back to normal.
Right back to where it was at.
You got to sell, and we're going to take that equity. And
which is stressful, definitely stressful.
For sure, it's stressful, especially coming into retirement, a period of time where you're, in theory, kind of supposed to be, I don't want to say forgetting about your finances, but
definitely not taking any sort of risk.
You're done working 40 hours a week. You don't want that to be stressful anymore. So I did, however, remind them because they got their offer accepted on a Friday for their new condo, and their house was going up for sale Friday night, and they were planning it coming soon. They were planning a bunch of open houses, planning a bunch of scheduling, and they got a lot of activity. They were getting a lot of showings scheduled and a lot of things going, and they called me kind of, I think, just to talk about the stress of buying and selling, and now the non-contingency and all the stuff that's going on. And I just told them, just as a friendly reminder, I said, hey, it's not, I think they had a 20 or 30 something showing schedule. They had a boatload of showing scheduled on their house. So I was like, hey, the good news is it sounds like you're going to get rid of it pretty quick. So this limbo period that you don't love shouldn't be a super long period, hopefully. At least you'll get it sold, and we'll knock this out. But I reminded them, I said, hey, just so you know, you're going to see a lot of offers. You're going to see a lot of stuff. At the end of the day, do what's best. Get your money out. Do what's best for your family in the situation, and make what works best. But I just did throw them a reminder. I said, hey, by the way, we have a lot of pre-approvals out there and a lot of people shopping in this price range. I knew of several people who were pre-approved inside our office that had already were going to look at it. And I just said, hey, just so you know, if someone comes through with a strong offer and it's got our approval letter on it, I guess I should have went backwards. To purchase their condo, they had to do it in like a 2.5 week time period. The sellers wanted a very short closing period. So we were doing that no problem already. But I did let them know, I said, hey, if you accept an offer this weekend and it just so happens to be a Mitten Mortgage Lending pre-approval, there's a very good chance that we can also help that buyer close on your home
quickly
before or the same day that you're closing on your new condo, which for you guys means you might not have to, for our clients, I say you might not have to liquidate all this money. We might be able to make it work so that you walk into the closing room, you sell your house.
Like they wanted.
We use that money, you buy your condo just like they wanted. And luckily for them, luckily for us, I guess little luck involved for everybody. I think they got a lot of good offers, but one of the best offers that they had came from us. Our buyers had a super short closing window on there because we were able to get it done in time, and it worked out. It was going to work out for everyone no matter what. The buyers that were buying the house could have bought it, and they could have bought their new house, but now everybody literally gets what they want, and these buyers don't have to liquidate all their funds. They get to move into their condo. They get to sell their house. Best case scenario for everybody, all because 2.5 weeks is not an issue to get a loan closed.
Yeah, speed can help a lot of those things. I'm sure the financial advisor is happy. There's probably less work for them to pull money out. You're going to put it back in.
Advisor loves it.
Don't have to worry about any of it.
Advisor keeps assets under management. Nothing comes out. So it's it's really a win for everybody, honestly. Everybody gets their home, everybody gets to move in, everybody wins.
Yeah, everything worked out exactly the way that
Exactly
people
how they
wanted
wanted
to,
it to. Even though they were okay doing it otherwise, everything was good otherwise, but it's better now. It's as good as it gets now. So that was exciting. I was happy for them. I was happy for everybody, and yeah, it's a good story.
All right, so next thing we got market update here. 2025 is officially here. We keep saying the Fed keeps cutting rates, and the interest rates continue to go up and up and up and creep up and creep up and creep up and creep up.
Yeah.
From where they're at.
Yeah, I don't know what to tell you guys anymore. I mean, here's the deal.
They're still not outrageous. We've seen them higher, like in the past 18 months.
We've seen them higher in the last year, I would say.
Yeah.
So they're better than that. I don't know. There's a little disconnect going on right now. The Fed has come. We've talked about this before. When the Fed says rates go down, it doesn't mean they go down. But the last two Fed announcements that said rates have been going down, rates have actually done the opposite and go up both times. So little disconnect there. Rates are supposed to get better this year.
But there's a lot of changes. I mean, there's a lot of changes. You got government turnover.
There's a new administration coming in. There is so much going on. Like I said, at the end of 22. I probably would have told you guys rates are coming down in 23. At the end of 23, I probably definitely told you guys rates were coming down in 24. 24 is over here. We are in 25. I don't know when rates are coming down. They will. They're going to. Like it's in the market. It will be. They will be back. They will come back down. But like Max said, they're not the worst right now. Like they've been worse, and just don't try to time the market. It's not going to happen.
Marry the house, date the rate.
Marry the house, date the rate. I hate to say it, but it's
true.
real. Like,
it's true.
Get in the house. Make sure you're comfortable with it. Make sure you know what's going to happen when the taxes go up, right? Like, make sure everything's comfortable there. But 100% marry the house, date the rate. I'm speaking to pretty much everybody right now. If you get a loan right now, a 30-year loan right now, I would bet a lot that you are not keeping that loan for 30 years. You will refinance it. You are not paying that rate for 30 years. So like it's not a permanent thing, it's a temporary thing. Make sure you're okay with it and start building equity. Just start the process.
And when we do see these rates tick up and kind of stay up, like they're getting pretty close to, normally what we see is new programs that come out that offer some sort of relief, whether it's purchasing relief, whether it's first-time buyer relief, whether it's refinance relief, FHA, VA. We normally come across something when rates are this high, people step up and take advantage of the opportunity and say, hey, we can offer this, and kind of get the ball moving. And that's where also working with a broker is especially helpful because everybody has their own one of these programs that comes out that we think is beneficial.
Yeah.
And we can point people in the right direction.
We've got a dozen lenders all with a special program.
Yeah.
So, no dumb questions. Let us know what we can help you with. I mean, don't sit on it. Don't not buy because you heard rates are high. It's they are. Like,
and the other thing we've seen with the market, I have seen an increase here in listings. A lot of people are probably waiting till the new year, so there is a little bit more inventory out there, definitely than it was before the holidays. Before the holidays, it was pretty bare. I'm seeing a lot of things get thrown onto the market, since the new year, which is a good thing. And a lot of people reaching out that are saying, I'm trying to get pre-approved. I'm really not looking until March or April. So we do have some people taking the advice we've been talking about, which is get pre-approved now. So you're prepared for when that house does become available in March or April. And it gives you time. I mean, it's so much easier to fix something with your credit in 90 days than it is in 20. It's super helpful. And that can make a huge difference. If you really are going to be somebody where you're really conscious about the rate and you're really super conscious about your payment and you got a strict budget, you're going to want your credit to be as good as it possibly can be. So let's have that conversation now, as opposed to, like I said, in March, and we're trying to fix it for you to buy something April 1st.
Yeah, because I mean, there's so many subtle differences in rates and credits and things now. I mean, it used to be 740 was the best. Now it's 780. So like Max said, I mean, and we could save you some money getting your score from 740 to 780, and you already got great credit at 740. Yeah. So talk to us now. I mean, and
we have referral partners that we can refer you to, a little fixed credit, or even things with your income if there's ways to increase that, or what you can do working more hours. Should I pick up a part-time job? Like, we can guide you on stuff like that.
We can get you set up. I cannot think back to kind of just like echoing something I said before, but in regards to this, I cannot think of one single borrower scenario since I've started doing mortgages where them reaching out. I cannot think of one borrower who's reached out to me too early.
Yeah, I
in
got
the process.
the problem was I got pre-approved too early. It said nobody ever.
I've never once seen that be a problem for anybody. I've seen a lot of people who we talked to and I said, we should get set up now, we should do this now. And they say, no, it's fine. And then we go to do it and it's not fine and it needs a little bit of work. So that happens way more than people.
That definitely happens.
That happens.
That definitely happens.
I wouldn't have a job if that didn't happen.
Yeah.
So
yeah, that definitely does.
But yeah, that's it. That's all for now.
So yeah, quick rundown. Again, appraisal waivers, we can get those with just 10% down. ACE plus PDR or value acceptance plus property data reports. Expect to see those a lot in 2025. That's where they're going to accept the value of the home, of that offer, but they just need some more data on the property. That only costs, $180, $200 compared to a $500 appraisal. Again, the value is already accepted, and we can get those with the bare minimum down. It does not have to be 10, it does not have to be 20. It could be 3, it could be 5, whatever that might be. Realtor classes, if you want to get out to United Wholesale Mortgage, see the way the sausage is made out there. Great opportunity. Again, we think it's super informative. We go out there often. Take advantage of that. Reach out. Let us know. Speed matters with loans. It can make things go from contingent to non-contingent real fast. Make everybody happy. And then that market, we're going to sit here and cross our fingers and hope that these rates start to go down by the next time that we talk to you guys.
They will. Sometime this year.
Sometime this year, we expect them to go down, but don't let that be the only factor and reason why.
Don't wait to buy a house for those.
Yeah, because when those things go down, it's going to get real competitive.
And it's already competitive. Mm-hmm. It's going to be crazy.
Yeah. So that's all for this time. Can't wait to see you guys the next time around. Hope to talk to you soon.